Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 5th, 2025, and we are diving deep into one of the world's most watched stocks, Apple, ticker symbol Apple. There has been a flurry of activity recently, from a major earnings report to the stock briefly touching a monumental $4 trillion market cap. First, let's break down the recent news before we get into what the charts are telling us. Apple's Q4 earnings, reported on October 30th, were a mixed bag but ultimately fueled a lot of optimism. Revenue and earnings per share both beat analyst estimates, which is a strong sign of the company's profitability. However, iPhone revenue came in just slightly below expectations, and more notably, sales in Greater China saw a year-over-year decline. Despite these misses, the market focused heavily on the company's incredibly bullish forward guidance. CEO Tim Cook stated he expects China revenue to return to growth in the holiday quarter, and the company is forecasting its best quarter ever for total revenue. This optimistic outlook has led many analysts to reiterate their buy ratings, with Bank of America raising its price target to a lofty $320. The consensus rating remains a moderate buy, but it's clear that Wall Street is anticipating a strong holiday season, buoyed by reported strong demand for the new iPhone 17 lineup. Other bullish factors include a massive $100 billion stock buyback program authorized earlier this year and rumors of new products like a low-cost MacBook. On the flip side, some caution is warranted due to valuation concerns, with metrics like the P/E ratio being higher than the market average. We've also seen significant insider selling over the last quarter, though it's important to note that institutional ownership remains very high at over 67%. Now, let's see how all of this news has translated into the price action on our daily chart. Looking at the bigger picture, Apple has been in a powerful and clear uptrend for the majority of 2025. The stock made a significant bottom back in early April around the $169 to $172 level, which now stands as a major long-term support zone. From that low, we've seen a steady climb, culminating in the massive price surge following the late October earnings report. This surge pushed the stock to a new all-time high of $277.32 on October 31st. This level is now the most critical overhead resistance that the bulls need to overcome. Following that peak, we've seen a sharp two-day pullback, which is not unusual after such a rapid ascent to new highs. The key question now is whether this is just a healthy consolidation before the next leg up, or the start of a more significant correction. A crucial support level to watch is the previous all-time high from around the turn of the year, near the $259 mark. Often, old resistance becomes new support, and a successful test of this level would be a very bullish sign. Another area of interest is the consolidation zone from September around the $240 to $245 range, which would be our next major support area if the $259 level fails to hold. Let's zoom in on the most recent price action from late October to today. Here you can clearly see the powerful rally into earnings, moving from around $252 on October 17th all the way to $271 right before the report. This shows significant buying anticipation from the market. Now, look closely at the candle for October 31st, the day the all-time high was set. This is what's known as a shooting star or a pin bar reversal candle. We see a long upper wick where the price rocketed to $277.32, but sellers stepped in aggressively and pushed the price all the way back down to close at $270.37. The fact that this pattern occurred on extremely high volume adds to its significance and suggests buyer exhaustion at those levels. It's a clear warning sign that the momentum may be shifting in the short term. The last two trading days, November 3rd and 4th, have been consolidation days inside the range of that big reversal candle, showing indecision in the market. Switching over to the 1-hour chart gives us a more granular view of this recent battle. We can see the gap up on the morning of the 31st, the quick push to the highs, and then the sustained selling pressure throughout the rest of the day. Since then, the price has been chopping sideways, building a short-term range. The immediate support level to watch on this time frame is the low from November 3rd, right around $266.25. A break below this level would likely signal a move down to test that bigger support level we identified at $259. To the upside, short-term resistance is forming around the $271.50 area. The price needs to reclaim this level to suggest the bulls are regaining control for another attempt at the all-time highs. Flipping to the 15-minute chart, we can see this coiling price action even more clearly. Notice how the trading range has been tightening over the last 24 hours. The price is essentially being squeezed between sellers taking profits near $271 and buyers defending the $267 to $268 area. This type of consolidation pattern often precedes a significant breakout or breakdown, so we should be on high alert for a decisive move in the coming sessions. So let's go back to the daily chart to recap and formulate a game plan. The long-term trend is undeniably bullish, supported by strong fundamentals like the buyback program and optimistic future guidance. However, the short-term picture is clouded by the reversal candle at the all-time high and some concerning valuation metrics. Let's summarize the key price levels to watch. Immediate resistance is the all-time high at $277.32. Minor support is at the recent low of $266.25. The most critical support zone is the prior resistance level around $259. So, what are the potential scenarios? The bullish case, which I believe has about a 60% probability, is that this pullback is a healthy consolidation. If buyers can push the price back above $272 and then break the $277.32 all-time high, the path would be clear for a move towards those higher analyst targets like $300 and even $320. This scenario is reinforced by the positive holiday season forecast. The bearish case, with maybe a 25% probability, is that the shooting star candle marked a significant short-term top. A break below the $266 support would be the first warning, and a subsequent failure to hold the $259 level could trigger a deeper correction towards the $240 to $245 support zone. A broader market sell-off or any negative news out of China could increase the likelihood of this scenario. Finally, there's a 15% chance we simply see more sideways chop between $266 and $277 as the market waits for the next major catalyst. Going forward, keep a close eye on retail sales data for the holiday quarter and any official news regarding new products. That's our in-depth look at Apple for today. Thank you for tuning in to explain the charts. Please remember, this video is for informational and educational purposes only and is not financial advice. Always conduct your own research and consult with a financial professional before making any investment decisions. Trade smart, and we'll see you in the next video.